So recently I created a video on factor investing and how it may give you an edge as an investor, or not. You can see the link above. But I wanted to round this off with a video on sector investing, which is another way investors use potentially to get an edge over the markets. In this video, I'm breaking down some of the basics. That's going to include what sector investing is, why it could be right for you or not, the different sectors you can invest into, and perhaps most interestingly, what sectors are hot right now and which have performed well over the 1, 5, and 10 years, and which ones may not be doing so great. So let's get started. So what exactly is sector investing? Well, if you think of the stock market as a giant buffet, broad market indexes would be you taking a small part of every dish available. But sector investing is more like choosing specific dishes from the buffet, like seafood, vegetarian, or pigging out on desserts. These individual dishes are different sectors of the economy. We're talking about areas like technology or healthcare or energy or consumer goods. And each sector groups together companies that operate in similar industries. So why would you focus on sectors rather than a broad market approach? Well, the idea is to potentially boost your returns and manage risk. For example, when the economy is booming, technology or consumer discretionary sectors might take off, as we've seen more recently. When things are uncertain, maybe you'd want to be in more stable sectors like consumer staples or healthcare. So sector investing lets you try and capitalize on these trends. If you think renewable energy is the future, you can invest specifically in the energy sector, for instance. If you think AI is going to continue to grow, then the tech sector may be for you. But it is worth remembering, with potentially higher returns comes potentially higher risk. Sectors can be more volatile than the overall market. Okay, let's run through the main sectors you can invest in. We're using the Global Industry Classification Standard, or GICS, and it's a common way to break down the markets. There are 11 main sectors, 24 industry groups, 68 industries, and 157 sub-industries. But we're going to stick with the main sectors in this video. Let's start with communication services. This is your connection across the world. Companies providing communication, media, and entertainment. Companies like Netflix, Disney, Google, Alphabet. These are sort of companies that sit in this sector. Then you have consumer discretionary. This is where people spend money on those non-essential things they want but don't necessarily need. This is companies like Amazon, Tesla, Home Depot, McDonald's, retailers, restaurants, automakers. Then we have consumer staples, the essentials, goods and services people buy no matter what the economy is doing. This will be things like Costco, Procter & Gamble, Coca-Cola. Then you have energy, companies powering the world, companies involved in oil, gas, and other fuels like BP, ExxonMobil, Chevron, etc. Then there's financials, the financial backbone of the economy, banks, insurance, investment firms, real estate sometimes. This is companies like Berkshire Hathaway, JP Morgan Chase, and those types of companies. Then you have healthcare. This is companies that are medical service equipment companies, pharmaceuticals, biotech, companies like Johnson & Johnson. Then there's industrials. This is around building and moving things, aerospace, defense, construction, manufacturing, transportation. Companies like Caterpillar are in this sector. Then we have a popular sector right now, information technology, the tech world, software, hardware, semiconductors, IT services. You know the names, Apple, Nvidia, Microsoft. These are companies that dominate this sector. Then we have materials, companies producing chemicals, metals, minerals, paper, and forest products. An example of this would be DuPont. Then there's real estate, bricks and mortar, your real estate development companies, management companies, investment companies, and REITs. Then there's utilities. These are the essential services to homes and businesses like electricity, gas, and water. That's the 11 main sectors. Now you can also break these sectors down even further, as I mentioned before, but for this video, let's stick at that level. So why don't we get to how these sectors have performed? I put together a table looking at some of the top UK-listed ETFs that focus on each of these sectors. ETFs are exchange traded funds and basically a basket of stocks that track a specific index. So in the table, we've got the sector, the ETF name, the expense ratio, that's the annual cost to own the ETF. And then we've got the 1-year performance and 5-year returns. We'll also talk to the sector index that they track against, the volatility, how many holdings they have, and the main holdings, at least the top 3 holdings. And then we can compare them to the FTSE All-World Global Index. And in the description in the video, I've got a link to all of the ETFs listed. All right, so why don't we look at what the numbers tell us? Looking at the past year, the information technology sector has crushed it, as we know. No great surprise here. Tech has been booming. Telecommunications services and financials have also had a strong year. Interestingly, over the last 5 years, IT, information technology, is still a clear winner, delivering incredible growth. Consumer discretionary and communication services have also shown impressive long-term performance. However, on the other hand, sectors like utilities, real estate, and consumer staples, while important, haven't seen the same levels of growth in the past 1 or 5 years. These sectors do tend to be more defensive and may perform better in different economic conditions, and I'll come on to that. So why don't we expand the time frame a little bit more to 10 years? If we focus on how these sectors have performed as a proxy in the US, we can see the best performing sector has continued to be information technology, with the worst being energy, materials, and consumer staples. Now, before we rush out and invest all our money in the top performing sectors, there's a few important things we need to consider. Firstly, there's a time horizon. Sector investing is often more suited to medium to long-term strategies. Sectors can be cyclical, meaning they go through periods of boom and bust. You need to be prepared to ride out potential downturns. And the next point is really important: economic cycles. Sectors are heavily influenced by the overall economic cycles and specific trends. You need to do your research, understand what's driving sector performance and whether those trends are likely to continue. Looking at this report from Fidelity, there is evidence to suggest that the performance of the sectors does vary depending on where we are in the economic cycle. If we look across the globe, Fidelity in Q1 2025 consider that the US, the UK, and Europe are later in the economic cycle and perhaps heading for recession. And so this might make real estate, consumer staples, and energy and utilities more attractive over the next period. Then there's diversification. While sector investing can potentially boost returns, it reduces diversification. Going all in one sector can be quite risky. Consider using sector ETFs and broader diversified portfolios to manage that risk. Then there's expense ratios. Keep an eye on the expense ratios. Even small differences can eat away at your return over time. And sometimes expense ratios for ETFs tracking a sector index can be more expensive. So sector investing can be quite a powerful tool to potentially enhance portfolio performance. By understanding the different sectors and keeping an eye on economic trends, it's a possibility you can make more informed investment decisions. But it is really worth remembering that you need to do your homework, consider your risk tolerance, and think long term. So are there any sectors that you're investing in right now or watching closely? Let me know in the comments below. And don't forget to like this video and subscribe and share with anyone you think might get value from it. See you next time.